Cash flow training is incredibly important to any independent life insurance telesales agent's business. But for some reason, most life insurance agencies and trainers don't train on this. It is critical and it's a disservice not to have this training. Guys, by watching this training, you will become a more successful life insurance telesales agent. Okay, stick with us. We got your back today. We're going to give you everything that we know, all the strategies that we've implemented at Digital BGA to go from 2 independent agents, me and my partner Nick, to becoming one of the fastest growing private companies in the nation, according to Inc. magazine, for the past 2 years, and all with no investment, guys. We've had zero investment into Digital BGA. Nobody owns a piece that injected cash. There's no private equity company out there giving us money. There is no rich uncle bankrolling us. We don't have any safety nets, okay? We've bootstrapped this company 100% by using savvy cash flow tactics. And we learned a lot through experience. Experiences like not knowing if we're going to make payroll some months because of, just getting paid too far out, right? There's situations where, opportunities that come through where we know that this will be a home run, but we don't have the money to do it. How do we get the money to do it? We don't take any investors or anything like that. We use savvy cash flow management. We're going to go through situations. We're going to go through the strategies and what you can do as an independent agent to think more like an entrepreneur, leverage, and be able to use cash flow management to your advantage to make it in this business. Guys, once you unlock the cash flow game in this business, the hidden driver of success appears. And we're going to get to that in just a second. Now, do me a quick favor. Give this video a thumbs up. Click that thumbs up button and make sure you're subscribed to our YouTube channel. We'll keep publishing content like this, which I was going to keep this internal, but we're just going to put it out there. And as long as there's engagement and stuff moving forward, by liking and subscribing, it circulates it in YouTube land. All right. So I'll start off by saying this, guys. This is a cash flow business as much as it's a sales business and as much as it's a service business. Now, when you made the jump to be an independent life insurance agent and gain that freedom and uncapped income potential, that means you are funding your own business. You are an entrepreneur now. You can't rely on anybody but yourself, including the cash it takes to run this business. And guess what? Every business requires a startup investment, then ongoing reinvestment to stay in the business. Those are habits that most agents don't really comprehend, the reinvestment of it, okay? We're in the fortunate situation where we don't have to front cash to get product on shelves that, and manage that inventory that may or may not sell. And then also pay for marketing on top of that. All we have to do as independent life insurance telesales agents is front cash to buy leads. That's it. And at some point in the future, you don't need to buy leads because you'll have a book of business spinning off new business. This is how you need to think about this business, because the moment that you stop buying leads, you're making the conscious decision to slow down your business. Think about that. The moment you stop taking leads, you're making the conscious decision to slow down your business. The reason agents slow down their business, they stop taking leads or they slow down their leads, is because of cash flow. That's it. It's because of cash flow. So we're going to talk through this. This is going to be an overview and best practices on cash flow, how to cash flow a life insurance telesales business. So let me give you a brief history. Right now, we're so used to commission advances and receiving commissions on issue that it's become expected, okay? That's what you expect when a new product comes out. And you'll refrain from writing carriers because they don't pay on issue or they don't advance or things like that, right? But guys, 20 plus years ago, there was no paying commissions on issue. You had to wait till draft. And the vast majority of carriers, they didn't advance. It was all as earned. So not only did you have to wait for draft, you had to wait, you got paid as earned on that, okay? It was only until recently, the past couple decades, where this all became so normal. And that's because the business has shifted primarily from selling face-to-face and networking in the, with businesses and your community and your more market and stuff. And it shifted to paying for marketing, paying for leads. And life insurance companies have had to adapt to keep producers producing. And how they do that is through advances and through paying on issue as well. Because we're in the digital era of selling life insurance, and agents have to be savvy cash flow managers. Okay? And this training is going to give it to you. So let's start here. Cash flowing a life insurance business is a balance between high volatility, right? Taking advances and dealing with chargebacks, and stability, building a pipeline of clients that will pay out in the future. Okay? Absorb this concept because this is the macro piece of cash flowing a business. You need the cash flow now to keep reinvesting in leads. We get that, right? But you also want to work on stabilizing your cash flow by building a pipeline of clients that will pay out in the future. This is why we're so big on putting leads on a credit card that you'll pay 0% interest on because you're going to pay it off. This lowers the volatility. That's why you do it. It allows you to get in a flow of receiving new leads every single day, because starting and stopping new leads is a recipe for failure in this business. You need a constant flow of leads. You need to get in rhythms. You need to get in the flow. Okay. By doing this, it gives you time to develop your pipeline. It gives you time for commissions to pay out, because instead of looking at your bank account daily, weekly, seeing if you've gotten paid from business you wrote, it doesn't matter. You look at it monthly. Okay. Embrace using a credit card to enhance cash flow. This is the number one thing every single agent should do. Do this right now if you haven't already taken advantage of it. Using a credit card will buy you 30 days of cash flow, okay? Because you're going to pay it off in 30 days with 0% interest, okay? This was a powerful concept that Nick and I learned from our business advisor when we were first getting started. We had to figure out how to build the technology that we needed to build, okay? So we were paying for everything up front. And once we weren't using credit cards or anything like that. Once we put everything on credit cards, we now have this pile of cash to invest in technology to build the infrastructure, the starting infrastructure of digital BGA. And then it took off from there. That is the one thing that we did that really propelled us. We didn't have to get an investor to build all this. Okay. So in your case, if you're an independent agent out there, again, you're going to have all this cash piling up, and yes, you'll have credit on, to offset that, but you're going to pay that off in 30 days, but it gives you a lot more flexibility. So who should be buying 30 days of cash flow by using a credit card? Okay. 2 buckets of agents. One, brand new agents for their first 2 months, put everything on a credit card. If you're ROI negative after 2 months, stop. There's something wrong with your business. Could be your activity, your presentation. Figure it out first. Okay. So you're only doing it for 2 months if you're a new agent and you're not profitable. But most agents should be profitable in their first 30 days, especially their first 60 days. So that's number one. Number two, any agent or agency that has positive monthly cash flow. If you're just even a little bit positive, right? Just you're squeaking out something, you can do this, okay? Just do not do this if you're unprofitable. Fix your business first, okay? Buying 30 days of cash flow. What does that mean? Now, if you have $0 in your bank account today and you want to build up a reserve to make other investments in your business and your infrastructure, whatever it is, right? Put all your purchases on credit card and let the cash build up for a month. Many agents think that, it's kind of pushing out the inevitable. You're going to make that payment anyway. You're not really like, what does this even do for you, right? Guys, this helps you withstand the day-to-day and week-to-week volatility in your business. Okay, it's important that you recognize the volatility of this business and prepare for it. Okay, your chargebacks, the sales slumps, the declines, that's all volatility in your business. And if you only have a certain amount of cash to make this business work, you're not going to be able to withstand those, okay? Doing this, it allows you to take enough leads and focus on your activity. You'll get in a flow taking new leads every single day. You'll gain confidence quickly. You'll build good habits of taking enough leads to make this business work. It has so many compounding effects. And It all starts from putting your leads and your expenses on a credit card for the first 30 days, okay? A lot of agents have an issue putting leads on a credit card because they perceive it as being irresponsible and putting themselves in a hole. Let me address that real quick, okay? You likely have no problem taking advances from your life insurance companies, right? Well, an advance is a loan from an insurance company that you have to pay back if a policy lapses. There is no difference between borrowing money from a credit card company and borrowing money from the insurance company. Okay? If you're still having a problem with putting stuff on credit for 30 days, let me drive this home a little bit. There's good debt and bad debt. Bad debt is living beyond your means. That's where most people get in trouble. This is good debt. Good debt is used as leverage to make more money. Advances are good debts. Credit is good debt if you're investing in your business. Any savvy entrepreneur, and this is what we are, guys, we're entrepreneurs. We are taking on all the risk. We have nobody to rely on but ourselves. Any savvy entrepreneur understands leverage is the key to growing a business, and you need to be comfortable with that. All right? Be comfortable with leverage. Let me go through another quick strategy as well. And this is for the agents that have been in the business for a while. Okay, this won't work for new agents. I just want to get this out here because it's really made an impact on our cash flow as well. And I'll go through that in just a second here. If you've worked with the same vendors for the years that you've been doing this business, and I'm talking lead vendors, marketing vendors, technology vendors, consultants, whatever it is, whatever vendors, right? Another way to enhance cash flow beyond 30 days, buying 30 days by using a credit card is asking for net payment terms. So that means that you will get your leads now and you pay for it later. So net 7 terms means that you pay for your invoice in 7 days. So you get your leads now, or you get the service now, you get the technology now, and then you pay for it in 7 days, okay? One of the strategies we used to finance opening our Charlotte call center was moving to net 21 terms with one of our core vendors that we spend a lot of money with. So if we spent $100,000 with this vendor and we spent around that, this opened up around $75,000 of cash flow for us to invest in building out the office and investing in getting talent over there. We're still paying them. We're just paying them in 21 days. Okay. And that was something that allowed us to use a growth lever in our business that most people would think they need an investment from, right? So you can do this. You can go to net terms with your really good, long-standing relationships, right? Those vendors that you've paid on time for a long time, they will do this for you because they want to keep your business and they like you, okay? So all the big call centers, all the agencies out there, all the IMOs are doing this. They're on net terms with most of their vendors. I mean, if you guys are following the Health IQ story, Health IQ, if you're not familiar, they just filed for bankruptcy. They were a primarily life insurance telesales shop that had over 100 million in funding. I think they had over 200 million in funding. But you can see in their public bankruptcy filings, all the lead vendors that they owe money to, they're all, in line trying to get money from the bankruptcy proceedings. And some of them they owe 6 figures to. Health IQ had all their lead vendors on net payment terms. And right now they're all getting screwed. But you're not going to screw over your vendors. We know that. But I'm just saying that just to prove a point that this is what happens. And this is how we start this is one of the ways that we gained a lot of cash to start our Charlotte call center. And it's how other businesses are freeing up cash flow in their business, moving to net payment terms. Okay. So again, you want to be working with somebody for at least a year, 2 years, 3 years before you even ask something like that. Now, advances. Let's talk about advances. This is huge for cash flow management. And we know it's essential for cash flow management as well, especially in the beginning, right? We all know that. So understand this though. An advance is a loan from a life insurance company and your upline is co-signing that loan. And if you default, they're on the hook for it. So just get this out of your head right now. When you think about recruiting a downline, understand that you are now co-signing a loan for those agents that you recruit. The next thing I want to talk about with advances is the downside, okay? The downside to taking advances is an agent's belief that the money in their bank account is theirs when it's not. It is not your money in your bank account yet, okay? You have to keep that business on the books until it moves through that period where you're subject to a chargeback. Now, don't get complacent with the money in your bank account, because the moment you stop selling, that money will start dwindling as chargebacks start hitting your books. And you need to factor in around 20% of your business will fall off the books in the first 13 months. Some agents do better, some agents do worse, but just factor that in, okay? Also understand for advances that you have advance caps on a per policy basis. Just because you wrote a $5,000 annual premium case that you fist pumped to and played your favorite song and took a shot of whiskey or whatever you do, doesn't mean that you have a big advance coming. If there's an advance cap of $600, you're only getting $600 and the rest is going to be paid out over the next 12 months. Okay. So understand advance caps when you're looking at your advances as well. Now, there is a path out of the advance rat race, because we don't all want to be reliant on advances, and that's time. Okay. Every year that goes by, you will rely less on advances because your cash flow will improve. At the end of year one of working full time, your as earned months 10 to 12, right? Months 10, 11, and 12, they'll start stacking up on top of the 50% advances that you took, the months 6, 7, 8, 9, 10, 11, and 12, right? And your renewals will build up a little bit as well. Now, you have to factor that in, okay? Because over time, it compounds. You'll be much more profitable as well because of rewrites and cross sells and referrals, and you won't have as big of a lead spend to write the same amount of business, so you won't need to take the advances anymore in the future, okay? So don't think this is the way. Playing this advance and chargeback game, this highly volatile game, over time, you're going to wean off of advances, and because you'll have a much more stable business. So let's talk about building cash flow stability in your business. Okay. When we first started Digital BGA, we were around 80% or so fully underwritten term, which, takes 60 to 90 days to pay out. However, the mentality was much healthier than what it is now with simplified issue products. Okay. Because you built a pipeline of applications and underwriting, and you knew that it would take that long to pay out. So you prepared financially for it. Now you're getting paid so quickly, but you're not prepared for the chargebacks or the business that's paid on draft or the advance caps that hit. Like, a lot of agents get taken by surprise by that. Okay. So, going back to the example, in 60 to 90 days, commissions would start dropping in, start weekly, then it would start daily from business you wrote from months before. You sacrifice the first 2 to 3 months in the business because for a much more stable business. We're forced to do that. That's what fully underwritten term does, right? However, times have changed, okay? Consumers prefer more simplified issue products, even if it's more expensive. And we know more consumers take action if the barrier to do so is less, okay? Even though they have to pay more. So we live in a more simplified issue era of life insurance. And with that, agents need to start embracing building their simplified issue pipeline. That means being okay and even welcome working with carriers that pay on draft, because you're going to receive that commission in the future, and that adds financial stability to your business. Welcoming carriers that pay a 6-month advance instead of a 9-month advance, guys. I know many agents don't like that, but it adds financial stability to your business, okay? You need to be okay with the advance caps on products. You're adding stability to your future business. And a lot of agents, and I love this trend, a lot of agents are taking their guaranteed issue business on an as-earned basis. If you're not doing this, I highly recommend you request that, because as you know, the persistency on guaranteed issue business is not good. And they don't have to deal with chargebacks. If they're just all the GI business, they don't count on it. They just know that's going to come every single month. All right. Building a pipeline of commissions that pay out over time will stabilize your business. Over time, that will reduce the anxiety in your business. It'll help your cash flow a lot more. Okay. So let's talk about best practices for cash flow. These are things that every agent should be doing to help with their cash flow. So number one is placement. Okay. So you'll place more business by getting cash with that, basically getting payment today instead of setting it out in the future draft date. Okay. So in your presentation, always assume payment today. And if they balk, then go to future draft dates. All right. You also want to place more business by using software to verify and confirm their banking information, their routing and account number. So I know you can Google and find routing numbers to confirm stuff, but also their account number. We use GUIACT to do that. There's a lot of other services. There's some other services out there that do that. And we watched our placement rise as soon as we implemented that. Every single LOA agent that we have must do that on every single case that they write with us. It's that important. And you see an uptick in placed business. Okay. Those are two things right there. Cash with app, get a payment now, assume that in your presentation, and then also confirm the banking information. All right. Then also use a max close offer. Okay. You're like, what does this have to do with cash flow? Well, think about it. Well, first of all, let me tell you what a max offer is, right? You're telling them how much they can qualify for, and then you work down from there. For final expense, you quote the maximum the carrier will offer, and there's a very delicate way to do that. For traditional term life insurance, that's just giving the maximum they can qualify for based on their income, and then a multiplier of their income that the carrier gives you in their guidelines. So we know that most won't take the maximum. It's out of their price range, right? But if you get one or two a month that do, because you're asking every single time, that's a mega effect on your cash flow. To have somebody that was going to pay $40 a month that now knows, oh, I can qualify for $50,000 of life insurance and it's only $350 a month, right? So you might get one that would pay $40 a month that is now $350 a month. That is an immediate impact on your cash flow and on your business just by going through that max offer close, okay? This is basic training for us at Digital BGA. Now, the other thing here is you want to work your unconverted and dead filed leads. A lot of agents just skim over this. They don't want to do it, but we do this in our call centers. We do this. This is a huge, huge thing for cash flow for us. If you don't have enough people to call on right now, guys, go back to the leads you already worked. Once you understand that a no is just a smoke screen, or you caught somebody at a bad time and they might have just said no because of that, you'll start writing business from your pool of unconverted leads that you dead filed. You wrote that business off. Like that's stuff that is basically free now because you weren't doing anything with it anyways. Go back and call those people, okay? That is going to have a huge effect on your cash flow if you just write even one of them, all right? Beat down your P&L. Cut any costs that do not make you money. This is an exercise that we perform once a month, but for you guys, you probably only need to do it once a quarter. Okay. All you need on your expenses are your leads and your software, like your CRMs, your quoters, your website hosting, right? Your internet, your VoIP or your phone system. That's all you need, right? Everything else, cut it out of your expenses. If there's subscriptions, cancel them, right? Do a P&L beatdown at least once every quarter. Now, you also want to have a website. And you're probably thinking like, Jeff, what the heck does a website have to do with cash flow? All right, let me give you an example here. I get calls still every single week from my book of business that I wrote prior to Digital BGA, and they're calling the phone number on my website. Okay, I know that because it's a unique phone number. I don't have it anywhere else, and I could see the analytics. And I do zero marketing. People are calling me because my name is on an email or on a policy, and they might Google my name and it pops up there. But you make it easy to find. If you start a website and you put your name and plus insurance, and it's an insurance website, you will rank at the top for your name. Okay. And that will bring you people calling you when they're ready to make a change, to add coverage or get their policy back in the books that may have lapsed. And that happens all the time. All right. So website that brands you and your agency, get that done if you haven't done it already. And guys, when you can master your cash flow, when you can do all these things, right? You place more business, you use the max offer, you're working your unconverted leads, you're beating down your P&L, you have your website so people can find you, you got yourself 30 days of cash flow, you're building stability in your business with, carriers that pay on draft, with 6-month advances, with, advance caps and all of that. Once you have all that going for you, you unlock the hidden driver of success in this business. And that's compounding leads. Okay. Look, You're going to start this business slow. What other agents have on you beyond knowledge of the presentation and carriers, which you can catch up really quickly to that, is a backlog of leads and follow-ups. That's all they have on you. You need to build that up to be truly able to write 1, 2, 3, 4, 5+ applications in a day. You need to be able to get to 3 to 5 hours of talk time daily. If you don't have enough leads to call to get you to 3 to 5 hours of talk time daily, you haven't hit that critical point of compounding leads. All right. And that's why it's imperative to take as many leads as possible, which requires savvy cash flow management. Give yourself the chance to get to that critical point of compounding leads and follow-ups. Okay. If you don't have enough leads to call, you get in your own head, right? And you become emotionally attached to every presentation that says no instead of just moving on to the next lead, right? You become attached to every decline and every chargeback. It like eats at you. It gives you this anxiety in the business. You start doubting yourself, right? Because you know it can literally make or break the profitability of your entire month and your future in this business if that happens to you, because you're not taking a lot of leads. You're putting all your eggs in one basket of leads and one batch or 2 batches of leads. And you just don't want to get yourself in that mindset or that position. When you take enough leads, the law of large numbers starts applying, and agents in the business a long time understand this concept, okay? You may have agents that may not be the best closers. They may not write the highest percentage of calls or leads, or they may not have the highest ROI, but they make up for it in volume and they make a great living. All right, guys, to close this out, I want to stress the point that this is a cash flow business, just as much as it's a sales and service business. Without the cash flow to bankroll your leads, you won't have the opportunity to sell. You won't have the runway to make it work, okay? Remember, it's high volatility in the beginning because of advances, and you don't have a lot of leads or follow-ups like the more veteran agents do. Every successful agent or agency had the discipline and mindset to push through that. The formula is this. Number 1, buy yourself 30 days of cash flow. Get a credit card, put all your leads on that credit card. Number 2, buy at least $1,000 worth of leads every single week at a minimum. And this is not just a digital BGA thing. This is any telesales agency out there is going to tell you the same thing. More if you're getting a hot start, right? Increase that. Focus on the activity and getting better every single day. Expect the cold streaks. Expect the volatility. It will happen, okay? But you have that 30 days of cash flow. You know you're going to be taking new leads every single day. You're not going to be dependent on those presentations that you get a no. You're not going to feel those feelings because you have more leads coming in. You're going to push through those cold streaks because you have those new leads coming in, all right? And then you pay off your credit card balance in 30 days. That's the third step. So buy yourself 30 days of cash flow, everything on a credit card, buy at least $1,000 worth of leads, pay off that credit card in 30 days, and then you analyze your P&L, okay? And this is how I want to end this video. If you're not as profitable as you wanted, did you write some business that will stabilize you in the future? Think through that, because I don't think a lot of agents go through this exercise. Maybe some will pay commissions on draft the next month, or the commission cap was hit on a big case that's going to result in future income, or some 50% advanced cases start paying you again in 6 months. Factor that in. And if so, ask yourself this question every single month after you look at your profitability, you look at your P&L. Can you now consider it a good month because of the future income headed your way and the stability that it will add to your cash flow? So look at all the policies that you sold when you're looking at your P&L and decide, and if you weren't as profitable as you should be, because a lot of agents, they leave the business after the first few months because they think they should be more profitable than it actually is, but they don't factor in all that stuff that's coming their way because of the paid on draft, the commission caps, the 50% advances, or the as earned business, right? So can you consider it a good month now because of the future income headed your way? Factor that in. Go through that exercise every month, okay? This was a big thing with us at Digital BGA because we feel like we should be more profitable so many months, but when we factor in a lot of this stuff, it all makes sense. You can count on that future income. It's going to stabilize your business, right? The other question to ask yourself, when you're looking at your P&L, do you have a lot of leads and follow-ups that are compounding, right? That will make this next month much more profitable, right? So if you've been in this for 6 months, you probably have follow-ups from the very first month you started doing this that are compounding on top of the second and third and fourth month, that you have these follow-ups where you're contacting them now once a month, or you might have a bunch of leads, from the past 90 days that you can call through as well. Guys, those are assets in your business, okay? So when you're looking at your P&L and you're not as profitable as you wanted, did you create a lot of opportunities that just haven't paid out yet in this last month? Think about that, all right? A lot of agents in the business look at their P&L or bank account in the beginning of their business and they get discouraged. When with the right knowledge and understanding, it may have been a very healthy month for their business because it's going to pay out in the future. It's going to help your future cash flow, but they don't see it that way, okay? The instant gratification wasn't there, which I know it all pumps us up. It gives us that jolt of energy, right? When we get those big deposits in, those advances, right? The instant gratification might not be there, but if you understand the future income heading your way and the value of your compounding pipeline, it would excite many of you investing a lot into your business to invest a lot more. All right. So guys, to end this off, I encourage all of you to think like savvy entrepreneurs, to use leverage, to implement the strategies we talked about in this video, to enhance your cash flow. It will help you grow your business. It will, a lot of the byproducts of doing this, the feelings that you feel, the emotions, the big swings, guys, this is what's going to help fight that. It's going to push back on that. Okay. Look at the future income coming your way. All right. If you found value in this, guys, please like, subscribe, turn on notifications for our future trainings. And if you have any questions, like always, post them in the comments below. If you have any tips on improving cash flow that's working for you, post it up in the comments. Let's hear them. All right. We'll see you in the next video.